Here's something I've noticed about MCS students at this stage of their preparation. You can recite Cartn's revenue split. You know the factory count. You've read the articles like 3 times. And yet, when someone asks you, so what's actually going on in this business? You freeze. Because there's a difference between knowing a pre-scene and understanding it. I'm Justina from Practices Academy, and Nisha, our MCS tutor, has spent weeks breaking Cartn down into 8 issues that are most likely to appear on the exam day. Not textbook topics, not generic strategy. The actual specific Cartn-shaped problems this business is dealing with right now. We're going to look at 4 of them in this video, so by the end, you will look at Cartn, let's say, differently. Over to you, Nisha.
So these are some of the key areas from a quick business context. Let's jump into our key issues. So we're going to talk about 8 key issues. So first we'll talk about the profitability gap and our overall strategy. Now, if you look at our closest competitor, Valboxx, they are earning a higher GP margin than us. Their operating profit based on this is 50% more operating profit on just 7% more revenue. So what does this indicate? This indicates that we are bearing more admin cost. Our admin cost is higher than Valboxx, and I think the fundamental reason is because of our consultancy division, which Valboxx doesn't have. So they avoid this cost, they earn more revenue, and they translate it to operating profit. Now, what's the logic of us having the consultancy division is obviously because we want to cross-sell. We believe that through offering consultancy, cross-selling synergy is possible. But this is the possible area you could be asked on the exam day. Is there actually a cross-selling synergy? What is that argument? How frequently do consultancy clients convert to manufacturing clients? If this is not happening, then the question is, does it make sense to continue a consultancy division? On the other hand, if we just look at the profits and we close the consultancy division, then we might be making a mistake, because this might mean we might damage our revenue without actually, we might reduce our revenue just in the hopes of saving cost. So we need to really look at how much this cross-selling synergy is all about. Next, the pricing strategy. Now, if you look at our overall consultancy pricing strategy, your pre-scene mentions we currently have a cost plus base pricing. Is this really making sense? Because what we're offering to customers, especially if we look at our closest competitor not offering this, we are really offering something of value to our customers. So if we are offering something of value, we need to capture that value in our pricing. So our pricing should ideally be a value-based pricing. And that might, in effect, really help us cover the additional admin cost of our consultancy division. So maybe the reason why our profits are not doing so well, especially our OP margin, could simply be because we're not pricing our consultancy services appropriately. So then, in addition with our profitability, our consultancy strategy, of course, comparison with Valboxx is important. Then we could look at, when we look at our manufacturing base, we look at our consultancy base, the question is, how should we treat them? So should we treat our manufacturing center as an investment center? And should we treat consultancy as a profit center? Then, how can we use balanced scorecard to measure our performance? So we can measure our performance against financial perspectives, customer perspectives. So some important aspects given. For an example, what is the conversion rate of consultancy to manufacturing? What is our on-time delivery rate of our manufacturing? What's the defect? Then if it's our internal processes, how is our internal processes working? What about our learning and growth? So consultancy, we can look at it from financial perspective, from a customer perspective, internal process, and of course, learning and growth. So remember, exam tasks can test you on whether the consultancy strategy makes sense. If it does make sense, how do we close the profitability gap between our closest competitor? And I think one of the most important triggers is our pricing strategy. Moving on to the next issue, sustainability and greenwashing. So we claim that we are sustainable, but what we need to remember about the construction of our cartons is that they have a multi-layer construction. So while the paperboard aspect is genuinely recyclable, the aluminium and plastic are more, they can't be recycled, but they can be repurposed. So now this brings us to various examinable scenarios. First of all, ethics. If we are claiming we are fully recyclable, are we been keeping to the ethical principles, first of all, of integrity? And what are the consequences of not doing so? So we need to think of the CIMA Code of Ethics as an important aspect to comment on when we talk about ethical aspects of sustainability claims and the fact that our cartons are not truly 100% sustainable. Then, what about obligations, environmental obligations? For an example, we might have a regulator sometimes find fault saying that we are making misleading claims on our cartons. So we might need to recognize a provision. So what is the relevant treatment for recognizing this provision? Then research and development. So assuming we are now trying to introduce a new carton, a new technology, so that we can produce maybe a fully recyclable carton. That is the goal. I think that is one of the main things as a business I see very important to work on. So then IAS 38 comes into play. So you need to identify the research phase cost has to be expensed, whereas development phase cost, if it meets the 6 criteria, it can be capitalized. So that is something to identify. And then, of course, how do we manage stakeholders? Because obviously, when we look at the sustainability aspects, for an example, environmental activist regulators might be very concerned about the sustainability aspects. On the other hand, shareholders will want profits. What about employees? So Mendelow's matrix, understanding how we can manage stakeholders based on the level of interest and the power they have is also something you might need to display on the day of the exam and show how you can manage various stakeholders. So remember, this might not be a direct question. How do you manage stakeholders? But within your answer, you might need to include it. So that's something you should be aware of. So the next issue is intangible assets and patent portfolio. So we touched on intangible assets, I think, when we spoke about the acquisitions, but we'll talk about it a little bit more here. We don't need to go into detail, but basically your pre-seen, the balance sheet shows us the intangible assets. So the intangible assets didn't change, they stayed the same. But remember, when it's intangible assets with a finite life or a limited life, you need to amortize it. If not, you need to do annual impairment test. Now, so these are the two accounting treatments based on whether it's a finite life or an infinite life. So basically, what you need to identify in terms of intangible assets is, one is if we are working on new technologies or new intangible assets, which is possible, or if there is an impairment. Finally, we have risk management and IAS 37 provisions. So risk management, again, is a key area we should discuss. So when it comes to risk management, remember, we are exposed to multiple risks, and at your managerial level, risk management becomes a big thing. Whether it is quality defects, whether it is legal claims due to maybe one of our cartons not meeting the quality standards, maybe input cost related, volatility related risk, maybe sustainability or regulatory risk. So various risk management becomes a key thing. So again, I'm not going to repeat, but IAS 37 might come if it's a regulatory aspect and now we need to recognize a provision or a contingent liability or even a contingent asset. What's the treat? Then if it's a commodity input cost related risk, how do we handle it? So remember, this will go back to maybe currency hedging, might go back to forward contracts, having agreements, all of that. Then how do we minimize product quality risk? Then one of the biggest risks is, I think, customer concentration risk. So 48% of our revenue comes from the dairy segment. So if we lose a major dairy customer, this would mean that immediately our revenue would decrease, factory will be underutilized, and our fixed costs will have to now be spread over a fewer units. So our margins will drop. So how do we handle this risk proactively, even before it can be realized? Or worse, how if it does realize on the exam day? How do we tackle that? So something for you to think about, something for you to see how we can deal with it. And of course, sustainability risk. So I think the key way we can deal with this sustainability aspect, we have to look at our layered construction of our cartons, look to create a new technology. We need to accelerate our research and development for a fully recyclable carton. And the key benefit of this is it will give us that first mover advantage.
4 down, 4 to go. The issues we have covered today are the heavyweights: acquisitions, foreign currency transactions under IAS 21, revenue recognitions across Cartn's dual income streams, and the capital investments and financing decisions that could reshape the business. Anyone who said MCS before will tell you these are the technical areas examiners lean on the hardest. They are where marks are won and lost. Nisha's full analysis of 8 issues, including every P2, F2, and E2 trigger she's pulled out of the presin, sits inside our MCS packages. Quick tour. Essential at £139. Is your foundation. Mocks, revision materials. Advanced steps you up with £199 with marked practice tasks, so someone actually reads what you've written and tells you where you're losing marks. Master is at £259. It's what most students go for. Full issues analysis, marked mocks, past sitting reviews, almost everything. And Ultimate at $379 as 3 one-on-one sessions with Nisha, weekly check-ins, and priority support when you need her the most. Everything's linked in the description. We want you to be sure when you finish your exam in May or August that you did it properly. Good luck, and Nisha and I will see you on the other side.